So tēnā koutou katoa, no America ho no te tematanga, no o tatahi toku kainga ina nei, e roi toku tanga mahi o Perryfield Warriors, ko Stephen mo toku ingoa, no reira ngā mihi kia koutou katoa. Hey, it's great to welcome you all here today, and we're going to be having a session looking at the changes in the budget which have come through. And I'm really excited that so many of you are joining me today. And I've got some special guests from my team, and we're going to be going through some of these changes and talking about them. So really glad that you're here today. Um, I am really excited to, I guess, run through some of the changes and talk about them with you. And hopefully at the end of it, we're going to be able to have a understanding of what it is that's changed and what that might mean for your charity or your situation. I'm just looking at the settings here, and it's just reached 100 people, and I think that's because Zoom has stopped the number that can go in. Um, so hold on just one second. I just need to check if I can get it changed so that more people can join.
Just hopeless.
And if you can
Do we have
go
these
off
problems
of,
all the
if you
time?
can put yourself on mute as well, that would be great.
Yes.
Oh, put your headphones on now and see if you're hearing it.
No, stop talking.
Sorry, somebody's on.
No, they were like them before.
If you can put yourself on mute, that would be great. I'm trying to find you in my settings to put you on mute, but it's not. There we go. Okay, there we go. All right. So what's going on is the Charities Act has changed, and it has introduced some changes that I think you need to know about. Um, and we're going to run through about 8 of them today. One of them is now in place already, and that's the cap on donation tax credits. And so we're going to spend a bit of time talking about that. But there's a number of other changes as well. And the thing I want to emphasize at the start is, firstly, how amazing it is that so many of you are joining from charities, because you're doing amazing and positive work in the community. And so thank you for all the work that you do. Um, and the other thing I want to say is some of these changes are actually positive. It's not all negative. Um, and so that's a really good thing, because it's going to help you in your charity to be able to achieve more. So I think we'll start by looking at the big headline one. And um, I've got Vicky with me here, who's going to be coming and going to be talking with me. Vicky, I'm just going to actually ask you to explain what it is that's changed. And while you do that, I'm going to be checking the settings so that we can try to increase so more people can join.
Sure.
So this is Vicky Reed, and she works in our team. So what is it that's changed, and what's the key implication?
Yeah, so if you've been keeping an eye on the news since the budget was released, there's been a really core change to tax donation credits. So now, under the new rules, there will be a cap on donors who give over $100,000, which means that they can claim back a maximum tax credit now of only $33,333.33 within a financial year. So this has the largest ramifications for charities who receive large donations regularly. Their donors will now be limited to a tax credit of 33,000. So it's the third back principle, but now capped at $100,000. So that's quite a big change. And IRD's comment on this is that the cap will affect about 350 donor entitlements, so about 0.1% of donors. But I think this makes up around 10% of actual giving. So it does have quite a large effect, and it might have some implications for your charity, because charities are in already quite a tough economic financial climate, and you're working really hard to secure as much funding as you can for things and relying on the generosity of donors. So it might be an opportunity for you to contact some of your large donors if you know that you're going to receive uh, donations of over $100,000. You might want to get in touch with those particular individuals. And you might want to think about how you can diversify your funding as well, where you can get your funding from. So we do expect there to be a trickle-down effect in terms of actual giving, regrettably, because we know you all do wonderful work in your respective areas. But it's definitely a policy concern from IRD's perspective. And they're looking to target particular individuals who are caught in, and we imagine it's quite a small proportion, but people who are donating to their own organizations and getting that credit back in this sort of perpetual loop, and making those really large donations in that regard too.
Yeah, and it's interesting. This is the one change that came in on budget night, and it was an announcement at the time. And it's not something I've been talking to IRD, and it's not something that was consulted on. It was from a ministerial direction. So the other changes we're going to run through, they actually, many of them don't take effect until 2027, 2028 and beyond. But this one is actually now in legislation. So I think it's the headlight change. And one thing I wanted to draw your attention to is this little paper we did called Charities, Donation Caps, and the Missing Analysis. So that's with Dr. Juliet Chevalier-Watts at the Waikato Law School. And in it, we run through the background to the change, what it is that it means, and what we think the implications could be. Because I think the headline thing is that legislation is decided ultimately by the people. And this is actually a chance where if we speak up, it might be something that gets changed. So sometimes you kind of sit back and think, well, that's it, that's the change. But I've seen in the past a number of times, particularly in charities, where actually if you raise your hand, if you make your voice heard, that actually politicians will listen and they might revisit whether the change goes through. So I guess I want to encourage everybody on the call to be making your voice heard if you don't think that this is a good idea. And I think the key thing from my perspective isn't so much the numbers of how many individuals are affected, because like you said, it's 350 people, but it's the impact of those people because they collectively the most recent statistic is that they gave $103 million of the 1 billion that went to charity. So it's 10% of the giving. So yes, it's 0.1% of individuals, but it's 10% of giving that is potentially going to be impacted. And particularly for those of you, I know a number of you are from charities that are looking to do capital projects, and maybe you're looking to fundraise for a large community center that's going to cost 20 million or, whatever it is. This is definitely going to have a chilling effect on going out to the larger donors and saying, would you consider gifting 250,000 or more? So yeah, it has that potential impact,
Sure.
doesn't it?
There's nothing to say as well, though, that the generous people that do give over 100,000 are not necessarily doing it for the tax credit too. I think that sometimes people's generosity really is just being generous. And so sometimes that might also be a consideration that you can have in talking with those donors. Are you comfortable even if you don't get a tax credit for that? And some of them will say yes.
Yeah, yeah, exactly. And I think it's important to remember that ultimately, like you were saying, maybe this is a call for all of us to tell our stories so well that people are willing to donate, whether they're going to get the tax credit or not.
Absolutely.
Yeah. The other thing that strikes me, though, is the sort of the chilling message that it gives. And it's almost like, yes, we want you to be generous, support charities, but not too much. Don't give too much, and ultimately the 19 million or so that's been identified. So charity services Inland Revenue has a regulatory impact statement, and I can send that out as follow-up. It's got their analysis of what the impact will be. And basically, it looks like it's about 19 million that they think they're going to save by putting this change through. But the impact on charities is potentially going to be in the tens of millions for the reasons that we've talked about, that
Yeah.
that there's this sort of chilling, why would we donate? Yeah. And the other thing is it's quite a contrast to what's being done overseas. So
Yeah.
there's overseas trends, isn't
Yeah.
there?
Yeah.
Yeah. So that's the probably the biggest change in some ways, and it's the headline one that everybody's been talking about. Um, all the other changes, when I talked to IRD, they said that they're going to be coming through in the September omnibus bill, which is what they kind of pulled together all the changes into one. But this is the one that came into effect basically on budget night. It was kind of a fait accompli, it's been done type of thing. IRD, when I was talking with them, and they've said that they're going to be releasing the advice that they prepared for ministers in July. So that's nice that there'll be transparency. I, along probably with some of you, had already OIA'd that to see what they were advising, but we'll have to read that. So I guess the summary here, and by the way, I hope people are using the chat function. Feel free to put questions or
I think we have a
comments,
few for-
and we'll make sure to have a look at those. But that's kind of the summary of where this particular issue is. So please have a read of that paper, the Charities Donation Caps and Missing Analysis.
Mhm.
And yeah, was there anything else you wanted to touch on there from on this one?
No, I think charities are really good at holding on to hope, even in the midst of bleak times. And so I think my parting comment would be hold on, there is hope, and don't let IRD or policy stop you from doing what is really good work in your areas. There are ways around it, and we are problem solvers. And so if you've got a particularly creative scheme about how to ensure you can retain funding and keep that cycle going on, do get in touch with us because we'd be happy to help and give some legal input on that too.
Yeah. Yeah, it's something that we're doing all the time is helping charities think creatively. And maybe this is a signal that we need to have blue skies thinking and think, well, what's the impact here? And what is the change? What does it mean for us in our charities? So, yeah. All right. Yeah, I see in the chat there are some comments, so keep those coming. Yeah, somebody said here, charities often do work that governments can't. With less funding coming to charities, then surely less work gets done. What has their view been on the knock-on effect of less service delivery by the charity sector? I think this is this underlying this question is what's the data? What's the impact going to be? And that's why for me and for others who are commenting and looking at this, that's part of the problem is it doesn't seem like there is that much analysis on what's the flow and impact on charities directly. So yeah, that's the short summary is I'm not sure that there is an analysis of what the impact is.
Yeah.
I would love to see more research and would love to see more objective data. So yeah. All right. Someone else has said here, is there any change to the ability of corporate donors to claim their relief on donations? I don't think that it has affected anything. It's not touching on companies. The way it would typically work there is they would give to a charity and it would be almost like an expense in their accounts rather than getting a tax credit as such. So no
Good question, though.
big change. Yeah, it is a good question. All right. Well, Vicky, thank you so much, and thanks for all the work you're doing in this area and trying to raise awareness. So if you want to go and let Matthew know that he can come
Absolutely.
down and we'll talk about the next change.
Thank you, everyone.
And apologies, what I'm trying to do while I'm talking to you is I've been working to try to increase the numbers from 100 above. So I see we're at 130 or so now. So that is good. And I'll just try to add my colleague as well. So Matthew, thank you for joining us. We are running through a number of changes for charities. Can you outline to us what change number 2 is and why people should care about this one in a good way?
Yeah.
This is a positive one.
So change number 2 is essentially impacts to membership subscriptions and levies. So in New Zealand, membership subscriptions and levies paid to clubs and societies have historically been non-taxable because of the mutuality principle. And this principle essentially states that um, if members of a club or society pool their money for a common purpose, then this would be tax exclusive. However, in 2025, IRD released a proposal of overriding this principle so that taxes would need to be paid on memberships and subscriptions. As you can imagine, this came with a lot of backlash, with the main concern being there's a lot of small clubs and societies out there, and they would essentially suffer extreme financial hardship and possibly close down. Um, However, as a result, the IRD further clarified not all clubs and societies would be impacted, and in some circumstances, membership subscriptions and levies could be taxable depending on the organization's circumstances and structure. However, this created uncertainty for many clubs and societies as there was not really clear guidance and a lot of ambiguity, and people did not know how to prepare for it. But long and behold, in the recent 2026 budget, the government announced that membership subscriptions and levies would remain non-taxable, along with the cap to donation tax credits. Assuming this legislation goes through, this would take effect from the 1st of April, 2027. And as obviously, as you can see, this is a very positive news for incorporated societies and clubs and societies, as not only do they not pay tax, they've got, at least for now, clarity on the matter.
So that's good. So this is a positive one.
Very positive, yeah.
And we've been helping member-based organizations who've been wondering what would the implication be if all of a sudden the fees that we get from our members becomes taxable, because it would have a huge impact on their sources of income. But in a way, no change is good change. Yeah. So that was easy. Thank you, Matthew.
No worries.
This is all outlined in this summary document as well that hopefully many of you have. And I know Bridget's online now, so maybe she can put it in the chat as we're going. So I think that's another really positive one. And we're going to keep moving along. Another special guest, Anne-Marie, thank you for joining me. We are just running through the changes for charities and the implications. We've got a whole bunch of people doing amazing work. And we've talked about the cap on donation tax credits, the member subscription change that it didn't happen. What have you got for us?
Well, as Stephen said, this is a positive potential change. And it relates to, whoops, I'm about to talk to you about the wrong one, increasing the tax-free threshold for not-for-profits. And just a reminder about the distinction between not-for-profits and charities. So all registered charities in New Zealand are not-for-profits, but not all not-for-profits are charities. So just keep that little distinction in mind there. But the good news is that the effective tax-free threshold for smaller not-for-profits is looking to change from $1,000 to $10,000. So that's really good news if you're one of the smaller entities out there.
And that actually has, because I think a lot of the people on this call will be way above that threshold.
Okay.
But I just want to emphasize that all of us wear multiple hats. And so you might be involved with the local knitting club who has $3,000 a year, literally, that's coming through. And up until now, it hasn't been below that tax-free threshold. But now, all of a sudden, it will be below it. And so what I'd encourage all of you to do is think of the local small, the genealogical society in your town or whatever, who are probably now under the threshold because they're less than 10,000. And that is something. So that's the net income of less than 10,000
Yeah.
per year. And the reason this is important is that this could affect thousands and thousands of these small volunteer-led little charities, and I want to help raise awareness for them. The key thing is maybe they don't need to be a registered charity anymore because they're already going to not have to pay tax.
Yeah.
So for them, it might reduce compliance costs, come off as a registered charity, and still get the benefits of income tax-free
Yeah. So
setting.
it is really good news, and this change is overdue because it hasn't been looked at since 1979. So that's great. But just to note as well that it wouldn't take effect until the 2027-28 income year.
Right. Yeah. So it's in the future.
Yeah.
So yeah, I realize for many of you, this isn't going to affect you directly because you would tell me, well, we have millions of dollars of budget or $100,000 budget, but it does affect thousands of small charities. So yeah, let's just be proactive together as a community and see if we can raise awareness for them. Because imagine if they didn't have to complete the returns and the filing obligations
Yeah.
and the maintaining registered charity status. The final thing on this is there might be other reasons why they want to be a registered charity. Like maybe it's not about the income tax, or maybe they want to be able to go to the local politician and say, we are a registered charity. But it's worth highlighting because it is an important change. You've got one more for me?
Okay, so in another piece of good news, this one relates to tax credits. And so just a reminder of what that is. So a donor who makes a donation to a registered charity will receive a tax donation credit, and they can either claim that back for themselves or they can direct it elsewhere. For example, back to the charity, which would be amazing for the charity. So at the moment, you can only actually do that once a year. So the charity will issue you your receipt, and at the end of the tax year, you'll have to go onto the IRD website. And I did this myself very recently.
Yeah, you have practical experience.
It's not a delightful experience, but thankfully, at least we have the option to do it. So what this change would do is enable some donors to claim those credits throughout the tax year. But there are a couple of constraints that you need to be aware of. So it only will apply to individual donors who earn a reportable income. So what does that mean in plain language? So a reportable income is when you know what you're going to actually earn. For donors, for example, who are self-employed, that's regarded as a non-reportable income, and they won't be able to make use of this change because they're not going to know how much they've earned in a particular tax year. So that's kind of a limitation on it.
Yeah. And this is something that will take effect from April 2028. So it's still a ways away, but yeah, it is a positive change.
Look, I think so, because it may incentivize donors to make more donations if they can, acquire their credit more easily. Yeah, it might make sure that people can keep track of what's happening with their tax credits as well, rather than waiting till the end of the year.
Yeah. Yeah, and in a way, it's a refining of a system which probably originally was very paper-based.
Yes.
And so you waited till the end of the financial year, and then you got a statement, and then you applied. And whereas now it is more fast-moving in the sense of I've just given some money to the charity, I can get the receipt, and then I can claim it back right away.
Yeah.
So
Or give it back to the charity.
yeah, well, that's actually the next change that we're going to talk about. So yeah, that's relevant. And Emery, while you're here, I wanted to mention that we have a webinar coming up. It's, I think, 1st of July.
Yes.
Do you want to just briefly mention what the topic is? And I'll try to find the link, or maybe
Yeah.
Bridget, if she's online, can find the link to it, and we'll put it in the chat.
So if you are a registered charity in New Zealand, you hopefully will be aware that there's a new law that you need to comply with, and it requires you to have reviewed your governance procedures in the last 3 years. And the first time that you'll need to make that confirmation is in October this year. So what Stephen and I will be talking about is, well, what does that actually mean in practice? because that's not actually defined in the legislation anywhere. So we'll give you some really clear examples of what you might be able to do.
Yeah, it's section 42G of the Charities Act. But it is a change. So
Yeah.
yeah, Bridget has popped the link in the chat if you're interested. I think we're up to almost 100 people who've signed up for that. It's free, maybe your board would be interested in learning more. Thank you, Emery, for that and for all that
Hey,
you
everyone.
do. And maybe you can bet, I think Danuki might be next.
Brilliant.
That yours? Thank you. In the chat, I see that somebody has said, can we advocate on this changes to the donation tax credits? And just so you know, Philanthropy New Zealand do an amazing job at rallying the sector. So right after all the changes came through, a letter was prepared and that was sent to ministers, and about 60 different organizations and individuals signed it. And it basically outlined why this wasn't a good idea. If you're interested, you'll have gotten an email from me with the Zoom link for this. So if you want, you can email me and I'll get permission, but I think it will be fine to share it with you because it's quite a good summary of why, what are the reasons that should be thought through on this change. And it might help to have consistent messaging if any of you are going to go to a minister. And Minister Watts is the one who's in charge of this. But of course, Minister Willis and Lexon and everyone's kind of all involved, I'm sure. So advocacy is, I think, important, and hopefully that's coming through. So Danuki, thank you so much for joining me. We're just running through a bunch of different changes. This next one, you got lucky because this one is probably a really positive one that not everybody will be aware of. So what is it that's changed?
Yeah, it is a really great change, quite a positive one. So I'm sure all of you are aware, but currently at the end of the financial year, donors can claim a tax credit on their donation. So currently that's 33%. So with the new changes, it's now charities, donors can specify that the charity should get that tax credit rather than it coming back to themselves. So that's a really kind of encouraging, helpful change, and hopefully it'll support the kind of charitable and community and voluntary sectors, because hopefully donors will be incentivized that they can directly give that tax credit or some of that tax credit back to the charity that they donated to. As Stephen may have mentioned, there's a lot of leakage in the system, with a lot of donors either not knowing about the tax credit system, that they can actually get a portion of their donation back, or that they just aren't kind of incentivized to go back. So there's a lot of money that kind of could be going towards charitable purposes, and a lot of donors would actually want that extra donation to go towards the charity that they support. So hopefully this will incentivize donors to kind of log on, and with the other changes that you can kind of claim not only during the financial year, hopefully it just lowers those barriers.
Yeah.
And that, yeah, people can kind of claim, well, not claim, but donate that tax credit or direct it to the charity. We are releasing a briefing paper on this soon as well, that will discuss a few other changes or a few ways the system we think could be improved. And we've worked with a lot of wonderful groups as well to bring that together.
Yeah, and I think the thing on this is that the statistics are actually kind of depressing on how much people. Well, the first thing is it's great that they give money to charities, but it's depressing how few people actually claim the 1/3 back. Because if they did that, they potentially would have more that they could give. So this is really, I view it as a really positive change. And the reason that it's important for all of you to be aware of this is it might affect your communications with your donors. Because if I were you, I would be getting very clear with them, hey, thank you so much for the $100 you gave me, or maybe $100,000 you gave me. That would be nice. Thank you for your donation is the point. did you know that you can now tell IRD to direct the 1/3 to come directly to us as a charity? So hopefully your mind is going where mine has been going, which is potentially this could lead to an uplift in the amount that you're receiving as a charity if you can communicate with your donors well. Because in the past, that 1/3 has gone back to the person who gave it. In the future, if you have designed your comms well, then that donor might say, I want the 1/3 to go to the charity that I gave the original amount to. So to me, that's actually a massive opportunity. And hopefully some of you are writing this down furiously because imagine the comms, if you could do this well, look at your balance sheet, look at the amount of donations you got in. Imagine if it was 1/3 more because you had successfully convinced your donors that they can help your charity by also donating that 1/3. Like it could be transformational in some ways, if you think about it. Obviously, you're not going to get everybody to give all of it, but you might as well try.
Yeah, yeah,
Um,
absolutely.
yeah.
Yeah.
So this paper that Danuki is mentioning, and I really appreciate the support from Danuki and from Anne-Marie, who was on before. We've kind of been co-writing it all together and spending well, it's actually a couple months now on it. Originally, it was going to be looking at the gift aid system in the UK and whether we could adopt a similar approach here, but we've reshifted it, and now it's focused on this change and what it might mean for charities. The one shortfall that I would highlight, and you might have something else that you have thought of, Danuki, but the one problem is that it's not when the person donates the money to the charity that they elect that the 1/3 goes to the charity. It's at the point when they come to claim the 1/3 back. And as we've said earlier, there's a vast majority of people who donate who never claim the 1/3 back. So it's an extra admin step that the donor is going to have to give the money, get the receipt from the charity, and then claim it from IRD. And as they claim it from IRD, they're going to be ticking a box saying, I want my donation, the 1/3, I want it to go to the charity. So my view is that that is introducing tangible barriers to a free flow of that 1/3 easily getting back to the charity. What I'd like to see is that when the person donates to you as charities, that they could tick a box that says, I'm donating $100 and I want my 1/3 to go to this charity. That to me would be a much simpler system, and it would be easier for you to be ensuring you're getting the 1/3. The reason why it hasn't been done, and I do understand this, but IRD has their own internal system and it runs in a certain way. So it's easier for them to do it this way if a donor claims back the 1/3 and specifies where the money goes, rather than introducing a new system, which would cost money to implement, where the donor can specify when they donate. But I'm still going to advocate that that's the change that we need for the benefit of charities, because I think it would make a massive difference whether a person specifies it when they donate versus when they claim. Yeah.
Yeah, absolutely.
Anything else that?
Yeah, no, I definitely agree with that as well. I think to really tackle the tax or the kind of leakage in the system, it's better to kind of front foot it and give people that option to direct the tax credit from the beginning with their donation, because things happen, life happens, and sometimes people don't get around to claiming their tax credits. Well, it used to be at the end of the financial year, and receipts get lost. So
Yeah.
being able to do that at the beginning kind of creates this like one and done donation, and it's kind of you can move on and donate to another charity, and you don't need to keep these things in your mind. So
Yeah.
would be good going forward to see something like that.
Yeah. And I love the chat. It's going, there's lots of great comments and likes and people commenting. Somebody said here, with the credit going back to charity, it will show up as anonymous. It will not be subject to an additional donation rebate. And that's accurate. I can confirm that's what I understand it to be. Yeah, so the person said we like to engage on the donor journey and engage with them. We would like to know who they are so we can engage with them. Yeah, that might be another point. Maybe we should add this to the paper
Mhm.
is, yeah, why not the 1/3 that goes back? Should that be subject to getting a third back? I guess it gets a bit complicated, but
Yeah.
anyway, we've outlined the issue, and the comments also are reflecting some of the points that we've been making that
Mhm.
probably you could streamline it a
Yeah.
bit better. So yeah, this is a positive change, but we can see ways it could be
Yeah.
improved.
Yeah.
Yeah,
Absolutely. Yeah.
great.
Okay.
All right, and that one is going to come in April 2028.
Mhm.
So that's another one which is not like next year, it's the year after. And as I said earlier on the call, just so everyone heard, a lot of these changes are coming through in the September 2026 bill. And so they will be subject to consultation, and we will have the chance to provide feedback
Mhm.
as they're going through that bill process. So keep an eye out. We're certainly going to be advocating for change, and it'd be great if everybody on the call was willing to join us and participate and actively engage in promoting change that would be positive. Thank you so much, Danuki. Really
Thanks, Steve.
appreciate
Thank
that.
you.
And you can send in, I think Jade is coming next. Just while Jade is going to make her way over, there was another two changes that I can touch on briefly because I just don't think they're going to affect the vast majority of you. The first one is that non-resident charities will now need to pay income tax. So again, I don't think this is going to impact, well, maybe one of you, I don't know. But this is those charities that they don't operate in New Zealand. They don't really have a connection here, but the rules had been that they could qualify for a tax position, not paying tax on income that was sourced here, but now they will. So in a way, I kind of think this is a positive, to be honest, because it's being accurate about where the charity is operating. There's a principle in New Zealand, you might have heard me mention this, called wholly or mainly. And so a charity needs to operate wholly or mainly in New Zealand to qualify for the tax position. That's judged usually by how much is going offshore. So if more than 25% goes offshore, you could jeopardize your tax status, not your charitable status, but your tax status. There's a way through that called Schedule 32, which is what the World Vision, Red Cross, all the big charities that go offshore, they use that. But the principle is if a charity is not operating wholly or mainly in New Zealand, then they shouldn't have the tax benefits. When I talked to IRD, they said that this was mainly going to capture things like universities that are based in London or in America that have the tax position but don't have any activity here. So I'm just mentioning it for completeness, that's all. The other one is private trusts that allocate their income. So if a private trust does allocate income to tax-exempt beneficiaries, then it will need to pay that to the beneficiaries within a specified period for it to be tax exempt. So to me, that's kind of a logical change. I already have said that will affect about 400 entities. So this is charities that get money and they pay it to another charity. So the point is they have to actually pay it to the other charity if they've said that's what they're going to do. There's also some honoraria simplification, and the IRD impact statement and their briefing goes into more detail on that. And that leads us to the final change that I wanted to cover, and then we'll just make sure there's no questions or comments in the chat. So if you do have a question that we haven't touched on yet, feel free now to drop it in the chat because we're going to talk about this one and then we're going to go to the answering any questions. Feel free to ask me anything. I'll open it up. Could be about any topic, and we'll do our best to answer. So Jade is with me. Jade and I work really closely on a variety of charity, and we call them for-purpose situations, or could be companies, could be charities. Jade, what would you like to tell us about?
Kia ora everyone. I'm called Jade McCormick. So I work closely with Stephen here on the impact team at Parryfield. So I'm here to speak briefly about the changes that have been made to the Active Investor Plus visa. So there's been the ability for philanthropic or charitable donations to count towards immigration status for some time, but this is a specific change. So I thought I'd start off about the visa in general. So a bit about it. It's designed to incentivize direct investment and greater economic benefit in New Zealand. So it entitles investors to live, work, study in New Zealand. And it also covers partners and any dependent children who are aged under 24 years. There's been a few changes in the past few years, but the more significant changes were made in April last year, which reduced the minimum investment amount from 15 million and introduced two investment categories. So they're called growth and balance. So these categories dictate the minimum amounts of investment, what type of investments can be made, how much time must be spent in New Zealand during the term of the investment, and probably importantly, how soon a visa holder can apply for residency. So first category, growth, requires at least New Zealand dollars, 5 million in investment. So these tend to be higher risk investments, so managed fund direct investments into businesses. They're less cash available, and the investment may be quite a long term as well. Balanced requires at least New Zealand dollars, use 10 million New Zealand dollars, and can include investment into things like property development, and along with the categories for the growth category visa. So as I said, permanent residence rights attached to each of these. So people on a growth category will be able to apply for residency after 3 years of funds in New Zealand, and balance after 5 years. So budget changes, which is the positive news, allow migrant investors further options for investing in philanthropic causes. So this is specific to the growth category. So this now allows 20% of the total investment to be eligible for charity. So if you're investing your minimum of 5 million, that's 1 million, up to 1 million can be into a charitable cause. They've also tacked in Department of Conservation initiatives for the eligibility under the growth category. So it could be eligible charities or an eligible Department of Conservation initiative. So this is quite a positive move. This, as said, the visa is geared at encouraging greater economic benefits. So it's great to see that charities are being included and kind of recognised for their role of contributing to our social and economic well-being.
So this is another positive.
It is.
Yeah, we started with the big headline one, which was the cap on donation tax credits, but this is a positive. The thing that I want to emphasize here, because we've got a lot of charity leaders on the call, and you might be thinking, oh, well, this investor visas, how could this impact me? But what I want you to hear, particularly those of you involved in fundraising, is in the future, wealthy people coming to New Zealand will be able to more easily get their visas if they give to charity up to the thresholds that are here. So why this matters, if you can tell your story well enough that you are the charity that they give their money to, win-win, because they're ticking a box that it will satisfy the visa category requirements, and you're getting a donation in from someone who's coming into New Zealand. So we've already had, because we're very active in this area, not me and Jade in the immigration space. So we have a whole team. Our firm has 100 people, and we have an immigration team. So they do these AIP, Active Investor Plus visas. And what we're finding is that some charities that we know, and some have just approached us and said, if you hear of any investors who want to get access to the visa and are wanting to give money, then tell them to keep us in mind. So I think that's quite a clever way of approaching it, being proactive and actually saying, well, we have this amazing environmental charity, which is, reducing carbon or whatever it is. Well, actually, maybe we could now have that qualify, or we have an amazing Te Reo Maori initiative to increase awareness and to, run a school. Well, all of a sudden, these investors could potentially come in. I like to paint the glass half full picture of that, like, oh, it would be easy. And hopefully you take this on board. having said all that, a version of this has been available for a while. It's just they've expanded it to more categories of what would apply. But my understanding is that no one has yet made the donation to qualify for the visa. So, yeah, having said maybe it's an option, I haven't actually seen it play out in terms of, hey, I'm a wealthy person. What was the number? I need to get to 5 million invested. And so I want to give 1 million to charity. But I like to be the glass half full person rather than glass half empty person. So I would like to think that if you could tell your story well and you could reach out to someone or you find out someone's looking to move to New Zealand, well, maybe your charity could be the first. And wouldn't that be transformative if you could get a large donation in that, they're happy, they get their visa, you're happy, you got the big donation. So, yeah. Any other points you wanted to?
I think I just wanted to run off it probably that it's sadly not for everyone. So there are eligibility criteria that you will have to meet in order for investment to be acceptable to immigration.
Yeah, you
So
have to have existed for a
you
while,
have
don't you?
existed for
Yeah.
a while. So Stephen spoke about people reaching out, and I think a few of them were fairly new and maybe just didn't quite make it. So we were talking through other options as well. Maybe there are, I think I won't speak to this too much, but avenues around commercial investment if the charity has a commercial arm or something like that. But again, won't go into too much detail on that. So New Zealand registered charity have 5 years of annual returns for the 5 years immediately before the investor applies for their visa. Have current inland revenue donee status. So charities that are tier 3 and up, so 1, 2, and 3, and donated funds must be exclusively used for New Zealand causes. So, and that must be evidenced in writing between the applicant and the charity.
Yeah.
Again, there are additional considerations around conflicts of interest and pre-affiliation. So if there is someone who you've already got in mind who's like that wealthy person over in America, some care will be needed around there, given immigration may decline applications for these applicants. And
Right.
also,
Like if you had set up the charity yourself and then you donate
exactly,
to it or things like
yeah.
that. Yeah. Yeah.
And also no personal benefits can be derived from donors as well. So it does really need to be quite clean, a genuine donation, quite arm's length. So as Stephen said, these are new funding activities. So it's super, but there are hooks, of course. So things we recommend, if this is something you're thinking of doing, market yourself strongly, tell your story, but also have things in place. We're lawyers to make it easy. So template donation agreements, confirmation letters to help your investor as much as possible. Something we can work with. That's something
Yeah.
I'm interested in.
And just picking up on something that you're mentioning there about what about a commercial side of things? So I'm not sure if everybody has a copy of this. It's called Changing Paradigms. And I think Bridget's still on. So if you don't mind putting the link to the free download, it's a book. It's very short and it has 25 essays from thought leaders about how we need to do things differently as charities and businesses. And one of the mindset shifts that I think we need to have as charities is a switch away from the Oliver Twist mindset of please give me something, please can I have more? And actually thinking about what you're talking about. What if we set up a startup? What if we had something which was advancing our purpose, making money while it did it? And if you did that, you could then have an investor come in and actually put money in, like one of these sorts of investors, couldn't you? Yeah. Yeah. The other thing, just in case it's not on your radar, there's another word called impact investing. We're about to release an impact investing practical guide, so be watching out for that. But I'd encourage you all to be thinking, if you are in a charitable context, what would it look like to frame up our next project, not in terms of a donation drive, but in terms of an investment opportunity? I know this won't work all the time, but sometimes there will be projects where you could actually say, we want to support this particular community, and we're going to do it, for example, through a social housing project. So you could set things up instead of being donate us, we need $5 million. You could say, actually, would you invest in our project? And we will have some financial return, which comes back to you. We're having impact and we're having financial return. If you're at all interested in that, there's a chapter in this book about impact investing. And like I say, we're about to release Impact Investing, a practical guide. Um, and also, I can't help but throw in, and Bridget, maybe you can find it. We did a paper looking at trustees and impact investing. And basically, my view is that trustees who sit on large pots of money should not just be thinking about the profit that comes from the capital that they've invested in long-term interest, bonds, safe deposits. They should also be considering how they invest for impact. In other words, what if we, instead of putting it in a mainstream bank to make nominal interest, what if we invested in a local startup that was advancing our purpose? So our charity was set up to advance education of children, and we invest in a startup that is developing an app to advance education of children. Like, hopefully that's easy to understand, but I think it's something that we need to consider more. So, yeah, so we did a legal opinion on that in impact investing, and there's a whole bunch of resources on that. Jade, thank you so much. Really appreciate that. It was awesome. And hopefully you all are getting the sense that, yes, there's changes that we might not all agree with. Well, the one in particular, but actually there are some other changes which are actually helpful and that charities can benefit from. So, yeah, it's really good. And Bridget's put a link to that legal opinion on impact investing in as well. And Bridget, maybe put the link to the impact investing hub as well, because there's a whole bunch of other resources. There's this one, Nature as Shareholder. What would it look like if nature had a place at your boardroom, whether you're a charity or a company? So, yeah, you might want to check that out. So I'm just going to turn to the chat. If you did have any, we're in the process of finishing. Just don't worry, you can get on to your next meetings. But I will have a look at the chat and just see if there's anything that jumps out. Hopefully you get the sense that we are quite an accessible law firm. We've got a really good team here. That was just some of the team. We have about 12, depending on how people are, but usually about 12 people working in our impact team. And about 100 people in the firm in total, so we can support with property and leases and disputes and other things as well. But one of our things is we want to be friendly and accessible. So if you ever do have a question, including on all that we've covered today, just drop me an email. I'll either call you or I'll get one of the team to call you. We don't charge people for that because we view it as a way that we're serving the charitable community, and it's something that we feel really passionate about. I will usually time those calls for when I'm driving somewhere, like I'm not wasting my time. So, but I probably do 5 or 6 calls a week to people where I just want to chat. You mentioned impact investing. What would that look like in my context? And I'll have a 15-minute chat as I'm going home or into work. So that's a free offer. No one ever believes in me when I make it, but it is a legit, real offer that a lawyer is saying, I'll talk to you for free. And obviously, if we can support with more detail, then happy to explore what that might look like. I also get often asked to speak to boards about impact investing. So if you've got a reticent board who says, no, we have to only invest in very safe things, I'm happy to shake things up a little bit and get them thinking more broadly about how do we use our resources in a really positive way. So hopefully that helps. There's some upcoming things. So I just wanted to mention the impact investing guide is coming out. Today we released the community housing guide. This is a free guide for anybody interested in community housing. So if you're, Bridget can maybe, she's busy, if you can put that in the chat, that would be great. I think it's a really good resource and it goes through everything you need to know about community housing. But we also have, I'm just finishing off a little book now called Impact Companies, which is going to be looking at how we can use corporate structures for positive change. As well as that, webinar that Emery and I are going to do on reviewing your rules. There's two others I'm excited about. I think they're next week, actually. One is called How to Create a Podcast for Impact. So some of you might actually be interested in this. Like, what would it look like to have a podcast? I do a podcast called Seeds, and I'm about to hit 500 interviews, hour-long conversations. You're welcome to subscribe and like. That has been going for about 9 years. And so I'll run through in that session how to set up a podcast, everything you need to know. And then immediately after it, I'm doing how to self-publish a book. I know some of you out there have a book in you and you always thought maybe one day. So I'm going to unlock how do you do something like that and what does it involve? So this might be in your personal capacity. You've got a bunch of poetry, you want to publish it, or you got a short story or whatever. This is like the nonfiction essays book, but this one here I did. It's like a children's book called The Apple Tree. So that one, I'll explain how that got created as well. So those are links that Bridget has already put into the chat. And in the follow-up email, we'll put links to everything that we've mentioned as well. All right. So thanks, everybody. I love all you're making us feel good, the positive feedback here. Really appreciate that. I think what we might do is just close it off there because I don't see anything jumping out here in terms of the burning questions. If you do have a burning question, then please just email it to me because honestly, it helps me. If I know what the question is out in the community, then we can create an article, we can do posts about it, we can raise awareness. So feel free to drop me a line anytime. I'm just going to close this off with a karakia. Kia ora te marino, kia whakapapa ponamu te moana, he hua rahahi ma tato I te rangi nei. Aroha atu, aroha mai. Tato ia tato katoa. May peace be widespread. May the sea be like greenstone, a pathway for us all this day. Give love, receive love. Let us show respect for each other. Thank you, everybody. Really appreciate you joining and keep up the great work. Hope we can meet at some point. Bye.